So it's Thursday, the 25th, and I'm jumping in here a little bit early because I don't know what's going to happen tomorrow. I may or may not be able to record, so I want to get something off to you for a couple of reasons. One, you want to see what's going on in the market. Tomorrow's a big day as well, and the market started moving, even though we are still going into the PCE reading, which I thought I'd probably hold until that. But I'm going to get to that here in a second. But the first reason that we're talking today is look at this sexy son bitch. I'm gonna be jumping on the Real Estate Investors Summit. It's gonna happen in 10 days and 22 hours, guys. So you want to go online, get this thing, get in registered for this. Let me show you the site itself. So it's if you want to go to the actual site, I'll have a link here. You can register under my link, but it's the Real Estate Investors Summit. So it's reinvestorssummit.com/ARCH. So reinvestorssummit.com/ARCH. That's how you get directly to my link. It'll take you to this and we'll get you set up. There's going to be a lot of people on there speaking. Now, there's going to be multiple different people with multiple different thought processes on investing in real estate and how to build your wealth. There's going to be lots of different strategies. Reach out to me. We'll talk about the strategies that are being presented, look at your particular thing from a financial perspective. Because here's where a lot of people come from when you're talking about all the different folks that are offering information. The problem with most of that information, it's one angled. We need to look at it from a bunch of angles. And I think from the angle, in my opinion, is how can you leverage? Because if you set up legal structures that actually impact your ability to leverage. If you purchase properties incorrectly, it impacts your ability to leverage and grow it. It doesn't help you achieve what you need to achieve. I get where some people are coming from with what they're trying to do. They're trying to move a process and a product. I get that what they got to do, but sometimes that process and product doesn't meet your overall objective. You got to be cautious when you step into things. Are you set up properly? We need to talk in advance of making any decisions on anything you hear and these things, because we want to set you up to lead up to being able to successfully close on the leverage and expand your holdings. If you can't leverage, it's only out of your pocket. And what we have found that when you put money directly out of your pocket, you'll make a return, but it's not near as big you'll make when you leverage. If you have a question about that, reach out to me. We'll talk about that in greater detail. So, economic calendar this week. We talked about other things a couple of days ago. What we're coming into today is GDP. It's a little bit hotter than what they anticipated. Durable orders, those are up. Those are up actually quite a bit in comparison to what it was previously and compared to what it was forecasted. Initial claims, those are down. Those initial claims went from 240,000 to 218,000. And of course, the continuing claims, those are slightly down from the 1.928 million to 1.926. So we have today. Existing home sales, those are flat with what they anticipated, slightly off of what they were prior. But tomorrow is where the PCE comes in, the personal income, personal spending, personal consumption expenditures, which is the Fed's favorite measure of inflation. And that's going to be just the general, then the core. But here is what's interesting to me. This is what I thought you guys would probably want to see. Let me actually get out of here and fire this particular thing back up, because the dashboard, I moved it wrong. And we want to make sure you can see exactly what I'm saying and why I'm saying it. So here we go. All right, gonna get the share in here. All right, so this is what I'm looking at. This is, I thought, so this line right here that was created here was holding quite well. And this is where we talked back here where it had this this floor created there. And we were holding it quite well for several days. We bounced off it, but look, we jumped down below it, and we're continuing down. Again, when the Fed did what it did, it impacted that, and we're going to go ahead and show you that Fed lower day. And the day the Fed lowered the interest rates, it impacted us, and it's done exactly as we predicted it would do, which is impact our interest rates to the negative, because it is an inflationary move. Then you look at the data we just talked about, which references more of a stronger economy, a little bit more inflationary. That's going to push bonds downward. That means nobody is going to invest more capital into this security than it is worth. You're not going to buy something more than it's worth. You're not going to buy a house for more than it's worth. The only time you bought houses for more than they're worth was where interest rates were lower and your monthly costs went down, but you paid more, not you specifically, but people paid more for the homes than what they should have. Why? Because the cost to acquire was lower on the monthly basis because of the interest rates were so low. Now we push the asset price way up. Now we've got this dynamic problem that we're dealing with, this of interest rates at a point where they should be, and cost of housing higher than they should be because of everybody pushing the prices up. And they pushed it up while they were lower inventory, not building. That's where I got the tinfoil hat. Guys, it just seems to me something was cooked to make this happen. So that's where that lies. We'll see how things go tomorrow. I'll hopefully be able, be able to put out another one tomorrow. And remember, you want to go to the Real Estate Investor Summit. So reinvestorsummit.com/ARCH. Jump on that. That link will be in all this. Talk to you guys soon.